Hey everyone, happy Thursday, August 8th. It's about 9:30 in the morning on the West Coast, and it's time for another market update. Going back to last week, we left off on Friday. On Thursday. On Friday, we were getting the big July BLS jobs report, and I'm happy to say that came out in our favor. Not good for employment, but good for mortgage rates. It was expected to be about 185,000 jobs created. It came in only at 114,000, and the unemployment rate jumped from 4.1 to 4.3. So let's take a closer look at that. Like I said, the estimate about 185, 175 came in at 114. They also made a 2-month negative revision of 29,000 jobs total. June was dropped from 206 to 179. May was dropped just slightly from 218 to 216, but remember that was 272 to begin with. So now they're down 56 from there. Birth death model, which this is where the BLS tries to figure out how many jobs were created from small businesses opening and closing. That came in at plus 246,000. Remember the ADP, which we just got a couple days before this, that came in at negative 7,000. So there's a big discrepancy. We know the birth death model in the BLS thing is all math. It's all them, projections and seasonal adjustments and things like that, where the ADP is actually coming from actual hard data, payroll data. So that's, if you take that 246 away, we're, coming in under, negative job loss. So still a little bit fishy about these numbers. Government went up 17,000, healthcare went up 55,000. Keep in mind that there's two different parts of this survey. There was that business establishment survey, and then there's the household survey where they actually call people and talk to them about what's going on in their lives. And this is where the unemployment number came from. As you can see, the jobs, there's only about 67,000 jobs created according to the household survey. The labor force, though, jumped by 420,000. Participation rate jumped up a little bit, and that's where we got that unemployment rate jumping from 4.1% to 4.3%. This is really important because, like we talked about a month or two ago, the Fed, I think 17 or 16 out of the 19 members of the Fed believe that, no chance that unemployment was going to jump above 4.2. Now at 4.3, so that's a surprise. Again, not good for people that lost their jobs, but as far as what we want the Fed to realize that they need to cut rates and not keep rates as elevated as they are right now, because they're going to do some real damage to the economy and our job market. By that jumping up, hopefully this lights a fire under them. It definitely lit a fire underneath the markets. We got the highest unemployment rate now since October 2021. So that was all positive stuff. Not positive to see unemployment jump, but positive that we need this kind of things to happen for the Fed to basically go in and cut the rates and change their course of action, which they've been doing. Next thing we got this week, it's actually a pretty quick week, a little short week on the markets as far as news goes. But initial jobs claims came out today. That dropped from 241,000 expected to 233,000. Last week it was at a high of how it's been. So a little bit less. Continuing claims, so people that are still having to be on unemployment, that continued to rise. I think that was up 6,000. So, we just need to keep seeing all this employment thing coming out in our favor. We need inflation to come in our favor, and that will keep the Fed, pointing in the right direction as far as we're concerned. Next thing, so the average 30-year last week when we left you was at 6.62. I'll tell you that on Friday, after that BLS jobs report came out, this dropped to 6.40. We're down all the way to about 6.4, 6.42 maybe. So a lot lower. Since Friday, on Monday, Tuesday, Wednesday, and then earlier today, we've had some sell-off. What happens a lot of times, there's been a lot of drop in these in rates and bonds and things like that, and there's investors involved. So a lot of times they stop along the way and cash out their profits. They made a lot of money if they bought in when it was higher, lower, whatever it may be. So we've had some technical stuff go on. We've had some auctions that haven't necessarily gone in our favor. So after a big drop, we kind of find ourselves back to where we were going into that report. So it'll be interesting to see, where that continues. Like I said, we kind of need inflation to continue to stay where it's at, if not drop further, and then we need the job market to continue to show weakness. So important dates coming up. We got the CPI reports on August 14th. The next PCE inflation data will come out on August 30th. So both of those in about a week and then 3 weeks. Then we get another BLS jobs report on 9/6, and then the Fed meets again on September 18th. That is going to be the important one. Right now, the market's 100% chance they cut. Are they going to cut only a quarter of a point, 25 bips, or are they going to cut a full half point? Right now, the market's actually having 55% chance to 45 that they actually go with the bigger cut with two cuts, so a half a point. That is what we want. The more they cut, the better for us. But it will be interesting to see, all that data that comes out between now and then, where that goes. So, it's been a roller coaster ride in the markets this week. We got to hope the inflation data stays flat. We got to hope unemployment, anything job related comes in our favor. And we just got to hope that the Fed makes the right decision when they meet on September 18th and cuts that rate as much as they can. So if anybody has any questions at all, please don't hesitate to reach out. Otherwise, I hope everybody has a great week. Thanks a lot, guys.